You buy into a technical support level and lose money. And then the darn stock, of course, trades higher. What if I told you there was a way to fix this? Hi, I'm Mike Bellafiore, co-founder of SMB Capital, a proprietary trading firm located in New York City. And I'm also the author of the Trading Classic, One Good Trade, and the Playbook. Founded in 2005, SMB Capital trades stocks and options and futures and crypto, both as discretionary and automated traders. In this video, a promising developing trader at the firm shares in step-by-step detail a trade in Google, where instead of focusing on a technical support level, he focuses on what you and he should. This difference could be the key to you transforming your good trading ideas into winning trades. Let's get to work on sharing these important trading lessons so you can turn that trading pain into future trading gains. Oh, and I'm curious, do you think I was too hard on this trader?
Today, we're going to be looking at a changing fundamentals opening weakness bounce trade from Google. This took place on February 2nd. My name is Justin. Okay, so first, looking at the intraday fundamentals in the background for this trade, Google reported their fourth quarter 2021 earnings after the close on February 1st of this year, where they beat analyst expectations on the top and bottom line. Revenues came in at $75.3 billion versus $72.17 billion expected. Earnings per share also came in higher than expectations. And some important bullet points from the report. Advertising revenue came in at $61.24 billion, up 33% from the $46.2 billion of the fourth quarter the previous year. And then some of the privacy changes that Apple had made to its iOS platform that we saw have a big effect on Snapchat, Facebook, Twitter. Google was less affected thanks to the sheer amount of data it collects through its own search engine and YouTube platform. So this was kind of a sigh of relief for investors as these policy changes that Apple has made had a big effect on the advertising platforms of some of the competitors. And then finally, Google announces a 21 stock split, which shareholders will vote to approve on June 1st. In my perspective, this is very big for Google because, as we know, Google is a high-priced stock that trades very thin. It is very difficult to trade because of the stock price and the lack of liquidity.
But you traded it anyway.
I did trade it anyway, yes. But in general, this stock split is good news for the company as it will, make the stock much more accessible for retail and a more broad range of participants. It's definitely tradable in its current state, but once it splits, will be much more tradable.
How'd Facebook do recently with its earnings?
Not good. Saw a very big gap.
And why
down.
didn't they do well?
Well, they're having a lot of trouble with their advertising side of the business, and they're I believe it was the revenue growth. I think it was the first.
Yeah, it was. So good that you noted that. Based on how Facebook did, Snap didn't have the same reaction after earnings. Snap was sold off when Facebook sold off, but then it actually had very good earnings. Correct. Question, did Google give guidance on the full year? So you do a good job here of citing how they did for the fourth quarter. What about for the full year?
I do not believe they guided for the full year. That is not something that I saw in the report. So no, I do not believe they offered full year guidance for revenues or for EPS.
Okay, question. Statement. Sorry, not question, statement. In the stats that we look at, average daily volume, ATR, that's how much stock moves intraday, short float, shares outstanding, institutional ownership, insider ownership, the stats that you put up here on the right. Please add what the VIX is on a given day, and let's start keeping note of how your trades work given what the VIX is overall. You're going to want to have a different playbook for if VIX is 12 and remember those years. Maybe we don't remember those years, but it wasn't that long ago where we had VIX 12 and even lower. wondering if we're ever going to have an elevated VIX again. And now with lots going on globally and potentially war and potentially the Fed raising rates more than we had thought, we want to keep track of what VIX is, and we want to make sure we have playbooks for the different readings for VIX. As volatility goes up, we're going to have a different playbook. As volatility goes down, we're going to have a different playbook. So let's keep track of that.
Glad you brought that up because I do include a slide when I talk about the big picture of the market. I do include a slide for the VIX.
All right, excellent.
So moving on, for the trade strategy for this setup, the opening weakness bounce trade. So first and foremost, I'm looking for a stock that is showing short-term strength with elevated volume and a recent positive catalyst. So in this case, we have the earnings beat and the stock split.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
As far as intraday price action, what I'm looking for is an opening flush. So a first move down, price falling to a nearby area of support right after the open. So some areas of support or demand that I may use would be a 1-hour moving average, 2-day VWAP, pre-market consolidation or base, or recent swing highs from the daily chart. Now, once we get to one of these levels, I want to see bids step in aggressively with no hesitation from buyers. I want to see price quickly move away from the level and want to see the tape speed up.
Why do you want to use 2-day VWAP when this is the first day after earnings?
Well, it's more for the pre-market price action. Obviously, when there's a big gap up like this, the day before is not, the price action isn't going to be as important, but it's more for the pre-market.
Yeah, you're right, it's not.
Yeah, no, you're 100% correct. It's more for the pre-market and after hours action for the previous day. Since, there is elevated volume during after hours and pre-market, much more volume than there would be on a typical day. So I do want to give some consideration to the price action, before the market opens.
But that's not 2-day VWAP.
I mean, yeah, you're correct. The way I look at it is if I use intraday VWAP, it's not giving me a representation of price and volume from, the after hours or pre-market session. But no, you're correct. I mean, 2-day VWAP is probably
I wasn't suggesting that you use VWAP on a day like today either, yet.
No, I agree with you. I mean, that's, for this setup in general, that's not something that was in play. So definitely should have taken that off. But as I was saying, we want to see bids step in aggressively at the level with no hesitation from buyers. Looking to see volume spike as well on the price upticks to show that we have real volume coming in on the up move. From there, I'm looking for price to retest and reclaim intraday VWAP. Now, if the stock breaks and holds above the opening highs, the trade has potential to develop into a bigger time frame trend trade. That is, if we do reclaim VWAP and we do reclaim the opening prices.
Yeah, well, what time of the day are you going to buy this?
This is a trade at the open. So first 15, 20 minutes is my window for this. But the quicker, the better. The quicker, the better.
But if there's going to be a flush on the open, right, then your VWAP is going to be too low if you're using VWAP from the open. If you're using VWAP from the pre-market, maybe less so. So are you using VWAP from the open, or are you using VWAP pre-market and open?
It would be both in this case.
Okay, so usually people pick one and watch one.
Yeah, no, I should be more specific in regards to the VWAP intraday or 2-day VWAP. I mean, typically for me, I'm using intraday VWAP, but as I mentioned, with this being earnings and elevated volume and price action in the after hours and pre-market session, yeah, that's definitely something I need to be more specific on.
So I thought you did a good job on the intraday fundamentals. So, and I like that you're adding trade strategy in here, and that's not a bad start for an intern for trade strategy. What internship stage are you at right now, Justin?
So I was a junior intern this previous last summer. Did the in-house internship with the firm. I had a great experience. Now I'm currently in my senior year of college, finishing up my last semester, and hoping to return and eventually earn a spot at the firm after graduation. So that's where I'm at right now.
Yeah. So so there's only one problem about this trade strategy, and I wonder if you might. Well, you're not going to be able to guess. So I'll give you the answer. But maybe people who are watching are guessing. It's not a bounce trade. A bounce trade is something that is oversold. So we don't say things are going to bounce unless they're completely oversold, and then we think they're going to trade higher. That term bounce relates to oversold conditions. What you're describing right here was a gap up, right? And then a pull-in to some support area. So it's a gap and pull-in trade, it's a gap and support trade, but you want to save your tags for bounce trades to, oh heck, the Q's 338 has been a big level. If we pull in there, can we bounce off of that level in oversold conditions? Or the market's down 6 days in a row and we're gapping down, can we bounce? Or stock is down 30% and this price is just not sustainable for the shorter term, and we think it's going to bounce. So let's use bounce term for products or markets that are oversold. This is not something we would consider to be a bounce. All right, next slide.
Great clarification. Moving forward, the trading plan for this setup. As I mentioned, I'm looking for the opening flush, the first move down after the bell. My areas of interest for this trade, potential bounce or pull-in levels, pull-in support, as we just discussed. The first level being 29.80, which was a pre-market base and swing highs from December 8th. And then below that, the 29.65, which was December 22nd swing highs. So I'm looking to enter once the stock finds support at one of the above levels.
When you say enter once stock finds support, what does that mean to you? How are you defining
For me, that means that we price trades down to the level. We see price hold the level or hold within a couple points of that level for this type of stock. And then I'm looking to see price retest, hold again, and then quickly move away from the level.
So you want something to trade down to a technical support area. You want it to slow and show that it can't push lower. And then you want it to show that it can't push lower again. And if you see that, then you'll buy.
Correct.
And then you're going to set, so what if something pulls in to a support area, and you do a good job making the distinction between a support area versus what too many traders do is they talk about support levels. A stock like Google is not going to trade to generally is not going to trade to a support level. It's so expensive that it's not going to stop at a particular price. That's how we would define a support level. But something like Google is going to trade to a support area because, as you mentioned at the beginning, I thought this was a really good observation from you, that it's hard to trade, it's going to touch a lot of prices. We're not going to expect Google to trade to 29.80 on the nose and then turn around and go back up. It's going to trade near the 29 area, and that might be a couple points above, 3 points above, it might be a couple points below, but we want to sort of around that area start to watch. So that's a really good distinction you're making there between the area as opposed to the level. We might see a level, for instance, in Roblox the other day, 53 was the low after earnings, 5308 specifically, but that 53 area was a technical support area after earnings. It got below there, it traded down 2 points, it came back up to that 53 area, it turned, and you could have shorted that from that 53 support technical area. Support becomes resistance, so in this case that support became resistance, but that 53 level you could trade off of. With Google, not so much, right? You're really going to have to start thinking about areas. Shark talks a lot about areas as well. He trades a lot of things that don't really just, there's a lot of participants in the stocks he trades that don't just go straight to levels. But this is a super important principle for traders to start looking at in their trading. I mean, am I losing money because I think something should just go to the support level and it doesn't go to this exact support price, and because it doesn't go to this exact support price or hold this exact support price, I hit out of the damn thing and then it goes higher? Or, something doesn't go to the exact support price, it trades a little bit higher than that, I don't buy it because I'm looking for the exact support price, as opposed to what you're saying is the support level or the support area. The support area. I want to see something go to the support area around certain prices. I will pay attention. And in this market that's a little bit that's uncertain, we've been saying that now since the beginning of January, with lots of market participants, with high volatility in a high beta stock like this, you're not going to make money trading Google talking about a support level. You're going to have to talk about support areas. And I would submit that most traders would make a lot more money when looking at technicals if they turned support levels into support areas and then overlaid some other variables to that to make some pretty good trades. So good job with that.
Yeah, excellent point. I mean, like you said, Google, being that it's going to touch a lot of prices, has a wide spread, you need to have a little bit wider stop than we would usually have, for this type of trade. And to accommodate that, we want to trade with light size because we don't want to put on, we don't want to lose more money than.
So is your stop loss 3 or 4 points?
Well, with Google, with the spreads being so wide, I mean, the spreads could almost be $1 wide at that, at some point. So between 3 and 4 is where I would like to control it to.
So at 3 points, you're not sure?
At 3 points, I'm ready to get out. I'm looking to get out. 4 points is just maybe a little bit of slippage given the spreads.
All right, so you're looking to exit 3 points below, and you're factoring in it might take you an extra point to get out.
Exactly.
Okay, great.
Yeah, and I just want to have light size, because I want to let myself stay in the trade and give myself those extra couple points just to let the trade work out. So next, I have potential reasons to sell. So potential reasons to sell in my favor, profit target being reached, which is VWAP in this case. A profit target is at VWAP for this trade, which was near the 3,000 level.
Justin, what time of day are you making this trade?
At the open.
Okay, so, I'm not sure which you got to make sure you know which VWAP you're using, right? Are you using VWAP that starts right from 9:30, or are you using VWAP that starts from the pre-market? And so, if you're going to tell me you're using VWAP from the pre-market, I'm a little bit more okay with you trading that back up into VWAP. I'm not okay with it if you're trading using VWAP right from the open, because right from the open, the stock Google would go down and VWAP would be too low, and you wouldn't have enough data to use that VWAP as an important area where you might want to sell it. You'd want to sell it when it goes up and it slows and you can see that it's not going up the same way. So I'll let you work on that.
Yeah, for sure. Definitely need to be very specific with that. I do believe for this trade, this was the 2-day VWAP with pre-market prices, but definitely need to be more specific going forward in the future.
Yeah, and look, you can't use 2-day VWAP. You can't use 2-day VWAP because the catalyst is earnings.
maybe what I should look at is anchoring a VWAP from the earnings call.
Great. That's my point. That is exactly the point I was hoping. I knew you would figure it out. So, yeah. So that the price action from after earnings is what's going to be most important to us right now. There could be other support levels that we find, but 2-day VWAP we'd use the next day. So we had earnings, the stock's trading. We might use it then, after a couple of days after earnings. But we have to make that distinction between the price data before the earnings and after.
Yeah, then so some reasons to sell if the stock goes against me. As I said, if we break through the lows and we can't sustain a bounce, and we get to that 3 points under the lows, definitely need to be out of the trade. And need to be very prompt about getting out because, as we talked about, Google can touch a lot of prices and can move very aggressively. So this isn't the type of trade where you kind of let it give it a little bit more. You have to be very specific with your stop here. So if we get that 3 points below the lows, I'm getting out very quickly. And if we see an extreme negative tick reading, for me that's negative 1200 or lower. That's also it's a red flag that we should consider making a trade decision and considering exiting the position if the selling pressure is really that strong.
Yeah, I mean, are you going to sell that after the extreme tick reading of 1200? You got to be careful about, what happens right after an extreme tick reading of 1200 most times.
Typically, short-term bounce, very small.
So that might get you out of your position, but you're going to want to sell that into an up move. I don't want to be hitting that right after tick reading negative 1200. I want to say, okay, the market's weak. I'm getting some signs. I don't see a negative 1200 tick too often. Let me sell into the next up move.
Yeah, good point. Okay, so moving on to the big picture for the SPY, the S&P has been rebounding from the January 24th lows, reclaiming the 100-day moving average on February 2nd, which was the day of this trade. The move back to the upside gained some momentum once we reclaimed the 200-day on the 31st. In terms of macroeconomic and political events, the tensions between Russia and Ukraine remain a concern and are being monitored day by day. Still, that's the case with today and this week. And then earnings season was beginning at this time with names such as Apple, Microsoft, Tesla reporting, and other big names to come. So lots of activity in the market around this time. Looking at the Qs, we see that they sold off a little more aggressively than SPY and have been slower to rebound. The 200-day moving average was just reclaimed today on the 2nd. And then also looking at the price action, the Qs are trading near a key level at 369.50, the area where the breakdown started from in early January. So I'm going to be watching very closely here to see if we can put in a close above this level and start gaining momentum back above that key level.
Good. This is a good job on the bigger picture, Justin. I particularly like how you're looking at this, the Qs level, to see how the market responds near that important Qs level and using that in your trade. But this is very good.
Thank you. So, as you mentioned earlier, the volatility index, the VIX, a very important thing to keep an eye on.
Good. Good job putting that in there. Good.
Yeah, absolutely. As we see, we had a huge spike up into the high 30s when the market was very weak and was selling off. And then in the subsequent week, when the market started to bounce a little bit, we saw volatility contract, saw volatility pull back. And just, in the recent days before this trade, we started to see volatility pick back up a little bit, but still far below the levels we got to near the end of January. So just being aware that, volatility has retraced, but we're still in a, pretty volatile environment with VIX near 25. As you had mentioned, there was periods, years back where the VIX would be below 12 for long periods of time. So just knowing that we are in a more volatile market environment and factoring that into our trading plan is very important.
Good. That's a 10 out of 10 for a representation of bigger picture.
Now moving on to the technical analysis for Google, starting with the daily chart. This is a snapshot from after the close on the 2nd, so after the price action is played out this day. We see that we had a 9.2% gap up from yesterday's prices, and we also gapped above the previous all-time highs, which were at 30.20. So to go into that a little bit deeper, this is one of the things that led me to believe we could see some quick selling off the open, because 9.2% gap up for a mega cap company like Google is very substantial. We see these percentage gap ups with smaller companies very frequently, but a company like Google to gap up this much is a big deal. And the fact that we're gapping above previous all-time highs, there is a good chance that some people may want to make some sales up here and make some sales with size. Size they might not be able to get off in the pre-market or after hours. So that was something on my mind coming into this trade, that, hey, we're opening, above the previous all-time high. Would not be surprised to see some quick selling here at the open. So that's kind of what led into this setup. Moving to the hourly time frame, we see the big move up after hours when the earnings are released, and we see the stock hold up really well. The stock continues to make higher lows. We're holding above those key levels, the 29.80 and 29.65 pre-market. We really have held above these levels well, haven't really pulled in that much. So it's a good sign to show strength of the stock and to show that, there's a lot of interest here. But as I said, just because of the level that we're gapping up above, very good chance that we do see some selling off the open. So moving on to the intraday price action, looking at after the open, looking at what happened here, we got the sharp move down. You see we opened above the 30.20 area, which was previous all-time highs, and then quickly made a first move down below 3,000, and then on the second candle started moving into 29.80. So at 29.80, you can see sellers quickly took control of the level and flushed right down to 29.65. And this is where we started to slow down, saw price leak through a little bit, and then immediately reclaim on the next candle and trade quickly away from the price, which was great to see. The one thing I do want to mention is that we did not see volume spike on the upticks, not nearly as much as I would have liked to see. We saw massive volume on the first candle, and then volume kind of just leveled and tapered off into the up move. So that was something to be cautious of and something that I did not really like to see, albeit the price action was very clean, but we did not see the volume spike that I was really looking for. So there was some caution around that.
Yeah, and I think that's a good job again in your technical analysis presentation. That's solid, both in your longer term, medium term, and intraday charts.
So moving on to the trade management and how I actually executed this, I entered on the reclaim and hold of 29.65. So to go back real quick, we see on this first, the red candle where we get down to the level, we seat below it just about. We talked about being an area. It's not going to touch the price down to the last cent. So that's okay that it goes through the level. But what I liked about this is that on the next candle, we immediately, we tested below and then immediately reclaimed and moved away from the price. So that was a great entry signal for me there.
So give me all the reasons why you're entering there and make your case.
Yeah, so, and a lot of it too is looking at the tape, seeing how the buyers, seeing how bids step up, seeing the time and sales speed up, looking to see, large volume of orders going through. And then, as I mentioned, we see price kind of break through the level, but then it quickly reclaims and it doesn't have any more test down at that level. Like, we quickly get away from that level, showing that there was interest there and buyers stepped in and lifted the stock. If we kind of sat around that level for a few minutes and kept testing, that's definitely going to weaken my confidence in the trade, because it's showing that buyers aren't that urgent to get in. The fact that we touched the level, quickly moved away, and we'd fail to come back to it shows that buyers were active at that level and were ready to support the stock. So that's really what was the entry signal for me.
And was that 29.65 area anywhere near an important technical support area?
So the 29.65 was swing highs from the end of the year, end of 2021. We can go back to the daily real quick and see we had these areas over here. We kind of had this double top area. So with the 29.65 was this little 3-day high.
Okay, I buy it.
had a technical level there, and we saw price respond to it very quickly. So, that was my entry signal.
That's a decent technical level. I'll give that a 7 out of 10 in terms of a technical level.
Right. It wasn't the best, but I mean, also there wasn't many other technical levels up here. So I was looking for an area where there was volume done, where there was previous price action. Since we're gapping above previous all-time highs, like you said, there wasn't exactly a 10 out of 10 technical level, but I was aware of the levels that could be in play, and it just so happened that 2965 was the level that buyers decided to step in. So back to the exit, around 2985, which was below my 2-day VWAP, which from now on will be anchored VWAP from the earnings release. But regardless, this was slightly too early. I had mentioned the volume not being as strong as I liked, and the market was, showing weakness off the open. So there was a couple things to be cautious of. That being said, the price action was very clean back to the upside. So this was a trade that I needed to stay in. I need to stay in at least until it hit my price target that I had defined before the trade. So if there's anything to knock about this, is that I just exited too early, jumped out of the trade before it was time to really think about selling, really make a trade decision. So, this ended up being a 2.5-hour trade.
If based on the way you entered, the way you want to exit, and the way that you use VWAP, I mean, it's going to leak through VWAP, and it's going to leak through VWAP because VWAP is too low. You want to think about, as it's getting near your exit target, to have both hands on the wheel, to really watch, but then to look for, like you saw at that 2965 area, where the tape changed, where the level 2 changed. You want to see the same thing into the strength. So you want to see into the strength the tape change again. You got in that way, it goes up near VWAP-ish. Again, I would love for you to use VWAP for an example like this, for a trade like this, including pre-market price action and not just on the bell, after the bell opens price action. That's a better VWAP for you to be using. And then, but you should be consistent with the VWAP you use, by the way. And then when it turns, again, when it stops showing you the strength into the up move, and you see something different, and you see the turn again, get out again.
Okay, so see the stock had opened above the previous all-time high, quickly broke through that. We're trading down to the 3,000 level now. What we're going to see here is this price is going to quickly move down with little resistance. I can fast forward through this a little bit, but just looking at the price action, you're going to see as the new 1-minute candle forms, we quickly get below the previous low. We're not really popping back up into the opening prices, struggling to reclaim. We're kind of just moving straight down. And if I fast forward a tad bit, you can see that we're consistently moving lower, now coming down into the 2980 level. So as 2980 approaches, as we said, I'm looking for, buyers to really show themselves in the tape. I'm looking for price to kind of stall there for a second, and then for buyers to come in, for the tape to speed up. So as we come into this level, this is what I'm looking for. And as we see, it just doesn't happen. Price sharply moves through the 2980 level and then really can't get back above it. So there was no entry there. They made that pretty easy for me. Sellers took control of the level very quickly. And now we're trading down to 2965. So here's where I'm really, two hands on the wheel, ready to see a turn. So here I'm watching the tape very closely, looking to see how we respond to the level. We leak below a little bit, but then what I see is that we start to hold this area really well. We aren't flushing through like we did on 2980. We're holding the area, starting to see bids stack a little bit, respecting the 2695 level. And then we see in the second candle, we dip below briefly, then pop right back above and start to move quickly away from the 2965 area, seeing the tape speed up a little bit, seeing price accelerate. So this is very good right here. This is very good. We're not seeing price get below 2965, seeing it quickly move away from the level. Buyers are showing themselves. As I've mentioned, volume, I would like to see it spiking a little more, But the fact that we are holding above this level, not retesting it, making pushes to higher prices is a very good sign. In a minute here, we'll reclaim 2980 and begin to move through that level.
That's good. And Justin, this is an example of an area you want to go back and watch on the tape. That move down to 265, what it looked like very specifically when it leaked below 265 and then reclaimed, and then what it looked like right after it reclaimed, and what it looked like when it got above 2980. This is a slice of tape that you really want to get into the habit of going back to watch, and not just you, other people as well. This is how you get better at your tape reading skills. And when you do that, it'll be a huge advantage over other traders because it's giving you the signal to get in. I mean, you have the technical support area that you're watching, and now you're overlaying that. You're increasing your odds of being correct by a multitude, by watching the order flow, by watching the level 2, by reading the tape. And when you have real good reading the tape skills that you're overlaying over a technical support area, you become a really consistently solid trader. So this is the stuff I want you guys watching. But good, excellent job, perfect, 10 out of 10 in your playbook presentation in finding a slice of tape that you should go back to watch for this trade. Spot on. I'm giving you 10 out of 10 on reading the tape. I'm giving you 10 out of 10. We should make this into like a game show. Who gets the highest score? I'm giving you 10 out of 10 on reading the tape. I'm giving you 10 out of 10 on technical analysis. And I'm giving you 10 out of 10 on intraday fundamentals. Let's see how you do in your trade review.
Awesome. So I always do a grading structure with my trades, and I want to assign a grade to just the overall setup and trade opportunity. So I know, what was this something that was really worth putting on risk? And for me, this was. I gave this an A+ because it was a setup I'm familiar with. It's really my most profitable setup. As we talked about, this is really more of a pull-in trade, a gap up and pull-in. This is the trade I'm referring to as being my best setup. I felt I was prepared for this trade in terms of my levels, in terms of my expectations, in terms of my risk plan. I feel like everything was very solid there, so I gave myself an A. And then as far as trade management, I gave myself a B because I didn't like my exit. Everything else was good, but I just felt that I didn't have a good reason to exit where I did. Kind of just jumped out of the trade because I was pretty decently in the money, and it was a premature exit. So I gave myself a B on the trade management.
I wouldn't give this an A+ trade opportunity. And the reason I wouldn't give this an A+ trading opportunity is because it's an A+ trading opportunity to me is you look for something that is trending on a higher time frame and is trending on a lower time frame. And there's alignment between those timelines. Meaning, once you enter, there's not much to do. The A+ setups are, hey, I think something's going to be really strong. I'm waiting for the entry. I see the entry. I enter. And I'm not really doing much until I really think this can be strong for a long time. Multiple points to the end of the day, maybe even making it into a 2-day swing trade. But a trade, not this can't be a B trade, not that this can't be a scalp trade, not that you can't make cash flow off of this trade. But this is a cash flow trade. And you did a good job making that cash flow trade. But a trade that you're going to make a lot of money end of month relative to your other trades, something that's going to really stand out, something's going to really pay you by the end of the month is going to be something that's directional, where you get in and you're confident, or your trade strategy is, hey, this is going to trend for an extended period of time. And I'm just entering, and then it's pretty much hands off. I may get out if I see certain things, but it's pretty much hands off, and I've got a tremendous risk reward. I've got a risk reward that's asymmetrical. This is a really solid job of making a cash flow trade, and it's because of your exit. You had so much stress to exit properly. If you would have held this, you would have given back all of your profits. Those aren't the easiest trades. You want stocks that move in one direction, not 2 directions and 3 directions. This moved in 2 directions. So Anyway, something to think about for your playbook.
Yeah, that's a great point. Definitely something to take into consideration. And I guess to build on that, thinking back to some of the other stock split catalyst announcements we had, whether it was Nvidia, Tesla, Apple, these stocks made huge moves after the announcement, but it was a much different market environment where the market was extremely strong. So, yeah, even though these previous examples made massive moves, I think this was an important part of this trade is that we are in a different
100%.
market
If
now.
this was in a stronger market, your entry could have been, this could have been an A+ trade because you would have entered and then held to the end of the day.
Right.
Or entered and held for a much bigger move than you got yourself in. But the market isn't that. And there's overhang because of the Fed and because of the Ukraine-Russia potential war. And that's not the market we're in.
Yeah, absolutely. And I mean, to build on that, I showed a couple slides here at the end. Okay, before I get to that, ideal executions. Basically the same thing. Want to make some sales on the way up to lock in cash flow, as I did. I mean, I exited the full position, but ideally would like to exit the full position once we see how price responds to VWAP and that we can't hold VWAP and that we're below VWAP. Then we get out of the trade, call it a cash flow trade. But these are the way I would have ideally executed. Going back to what we were just saying though, with the market environment and everything, this is a follow-up chart. So this is the 1 hour chart for a couple weeks after this day. We can see on the left side of the chart, this is the earnings move, and we just couldn't sustain the move at all. I mean, we gave up all the gains that the earnings from the earnings day, and traded back below the prices of pre-earnings. So goes to show the market environment we're in, that this, even though we have a stock split catalyst, very strong earnings, it's not enough to hold the stock up. Look at the daily chart, see the same thing. Prices pretty much move straight down from the earnings day. So definitely interesting way that this played out, given a lot of people were, expecting a lot of this given the recent examples of stock splits and the moves we've seen. But, just completely different market environment where there's a lot of uncertainty. There's a lot more sell pressure. So this is how it ended up playing out in subsequent weeks. We did not see continuation higher as some of the other examples did. So just an important thing to note, I feel like, for this setup and how it ended up playing out in the subsequent weeks. But that's about it for the trade and for the presentation. So thank you everyone for attending, and thank you Bella for the valuable advice and pointers. I think I definitely have some ways I can improve this trade now and improve my overall playbook. So thank you for that.
You got it. Appreciate it. Thanks, Justin. Thanks, everyone. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.